In my video from last week, I discussed how ugly and unhealthy the stock markets looked. Well, this last week didn't improve at all, except for the safer stocks in the Dow Jones Industrial Average. But where does that leave us heading into next year? Even yesterday when the stocks rallied, you can see here the best performers were SPY, the Dow Jones Industrial Average, small caps, NASDAQ, followed by Ark Invest. You can certainly see that here in these reported numbers if you can't see it on the graph. This is an unhealthy stock market. You really want the highest risk stocks to be leading on the way up, not the safest stocks. As you know from my previous videos, this is a very unhealthy attempt at a rally. How this year ends for the stock market is anybody's guess, but there are some signs that we could see another rally attempt in the remaining few days. As usual, let's take a look at the market action over the past week and longer time frames so we can get some perspective about what's really going on here. As you can see over the past week, the only index that ended up in the positive was the Dow Jones Industrial Average, followed by small caps in the S&P 500, the NASDAQ 100, and way at the bottom, Ark Invest. This is not a healthy attempt at a stock market rally. What about over the past month? Again, not a good picture. Dow Jones leading the way even though it was down, followed by the S&P 500, followed by small caps, followed by the NASDAQ 100, followed by Ark Invest. Again, not a healthy stock market at all. What about over the past 6 months? Well, it's amazing to me that any of these are up over the past 6 months. This has been a horrible year. But the Dow Jones Industrial Average is actually the only one that's positive over the past 6 months. You can see all the others are negative. Again, a very unhealthy market picture. And let's go back 5 years to get some real perspective here. And if we look at this, you can see that this makes a little more sense. NASDAQ is leading the way higher, up 71.65%. The S&P 500 is in second place, up 43.49%. The Dow Jones Industrial Average up 34.18%. Small caps up 14.38%, followed by Ark Invest, which is down 16.48% from 5 years ago. This has got to be the bargain of the century. And why do I say that? Well, if you look into these companies that are in Ark Invest, this is 5 years later. 5 years ago, their revenues were lower. Their earnings, if they had them, were much lower. They were in much worse shape, but yet they're selling for less now than they were then, even with higher revenue, higher earnings, and better future prospects. This makes no sense whatsoever. And what about the current bottom analysis dynamics? Well, you can see here that the S&P 500 peaked out back here and has been kind of falling since then. And the bottom forming indicator came up to 100%, but the confidence level wasn't high enough. So we haven't seen a bottom yet, or any kind of a bottom forming indicator yet. This is not looking good. Now, you can see that the confidence level is falling here as this bottom forming indicator is going up again. This kind of indicates to me that the stock market could go higher in the next day or two. No guarantees, but just what I'm seeing here. I don't usually do this, but I thought given this is the end of the year, let's take a look back over the entire previous year to see what these bottom indications have looked like. I think it'll give you a better sense of how they work over time. So if we go, wow, we go way back here, you can see the market was falling. There was some sort of a bottom forming indication, not a very good one here, not a very strong one. And you can see we had a bottom and then followed by another bottom. Now, here was a bottom confirmation back in, looks like late March. And that was right before this peaked out. So this failed, continued to go lower. And we got another bottom forming indication back here in, looks like, early June. Now you can see we didn't get a bottom, well, we did get a bottom confirmation, kind of a weak one here possibly. You'd like to see this blue bottom confirmation line going to 100%. It didn't quite get there, but the confidence level was very high. So you could have gone long here. Certainly we didn't get a bottom confirmation here. The confidence level wasn't high enough, but the market rallied and then started to falter again. Now, what do we have after that falter? Bottom forming indication here, bottom forming indication here, two of them in a row. We finally got a bottom confirmation here, and you can see that after that, the stock market continued higher until this recent peak where now it started to decline again. You can see that we tried another bottom confirmation here, but the confidence level not only didn't get high enough, it was falling as this was still going up. That's an indication that this is going to start going down, which is in fact what it did. It's always really helpful to take a look at equity versus safety. It really gives you a view into what's kind of going on in the markets. And I got to tell you right now, we're in not a good place. Equities are not healthy right now, and treasuries are not healthy right now. So let's take a look at why am I saying this? Well, back here on August 17th, we had a healthy stock market, healthy equity market with higher risk equities ranked 1 and 2. And you can see we had an unhealthy treasury market with longer duration treasuries ranked dead last. So this is an unhealthy treasury market, healthy equity market. Then by September 30th, we had an unhealthy treasury market still and an unhealthy equity market. A week ago on December 16th, we had a very healthy treasury market, but we had an unhealthy stock market. You can see that the safer stocks, Dow Jones Industrial Average, are ranked above SPY, the Qs, and the small caps. Now, where are we as of this past Friday, December 23rd? Well, not in a good place in either case. You can see that the longer-term treasuries have fallen down near the bottom here. This is an unhealthy treasury market. And the higher risk equities are also at the bottom of the equity rankings, unhealthy stock market. This is not a good look. The only things that look halfway decent here right now are cash and gold and maybe some T-bills. That's it. How does this show up in the buying and selling pressure? Well, let's take a look. You can see that for quite a while here, we had a very nice little rally going on here in the Dow, as I've pointed out many times. And you can see the buying pressure, this solid gray line, was well above the selling pressure, this solid orange line. But you can see even as the Dow continued higher here, the buying pressure started to collapse. This is an indication that this rally wasn't going to last, and boy, it didn't. So now it has been falling for the last month or so. What about for the S&P 500? Well, you can see we had a similar situation here, buying pressure above the selling pressure, although as this continued inching higher here, the buying pressure was declining over time. And now you can see since the S&P has been falling, the selling pressure has been increasing and is well above the buying pressure. Not a good look. What about the NASDAQ 100? Not much of a rally here and has been falling quite a bit since it peaked out back here. And you can see that in the selling pressure moving well above the buying pressure. Russell 2000, a very similar look, although it kind of peaked out back here, tried to have another rally here and peak out. But you can see it's been falling ever since. And again, selling pressure well above the buying pressure. And what about Ark Innovation? Well, Ark Innovation has been falling for quite a while, as you saw in the previous charts, and the selling pressure is well above the buying pressure. Now, one thing I want to point out here, let's go back. You can see that the selling pressure has been declining here, and the selling pressure is declining here right at the end. Selling pressure declining here, selling pressure declining here, and selling pressure declining here. This might be an indication that we could see a little bit of a rally beginning of next week when the markets open again. We'll have to wait and see. Now, how do the sector rankings look? Now, remember, these are measured over a longer time period, so they're not going to react as quickly as equity versus safety. But I think this tells a pretty good story. If we look at the sector rankings from last week, you can see that cash was ranked number 5. Behind gold, energy, healthcare, aerospace, defense. You can see all of the treasuries were here in the top ranked sectors. Well, what about this week? So if we go to this week, cash has dropped all the way down here. So that's actually an improvement. That means other things are performing better than cash. But you can also see that long-term treasuries fell off of this list. So let's go back here. Here's a week ago. and you can see where cash is and where treasuries are. And then this is this week. You can see where cash has fallen. These treasuries haven't moved lower, but TLT fell off of this list, longer term treasuries. What about the worst performing sectors from last week? Now, I decided this week to reverse the order of these so they kind of match, they kind of flow with the previous charts of the best performing sectors. So now the best performing ones are here, worst performing over here. And you can see last week, Bitcoin and innovation were right at the bottom. We had emerging companies here. And what about this week? And this week, emerging companies have actually moved up a little bit. This is encouraging. These are higher risk equities. And I like the fact that these are moving higher in the rankings. Don't know what it means yet. We'll have to wait till next week or maybe even longer to find out. Before we dive into the buying and selling pressure on treasuries, let's look at the price action of treasuries over the past 5 days. And you can see it has just been awful. This is EDV, which are very long duration treasuries, more than 20 years. They have fallen the most, followed by TLT, 20-year duration treasuries, followed by 7 to 10-year treasuries, followed by 3 to 7-year treasuries, followed by short-term 1 to 3-year treasuries. This is a very unhealthy looking treasury market. Well, how does that show up in the buying and selling pressure? You can see here that when treasuries were rallying, the buying pressure was well above the selling pressure for most of this period. But more recently, the selling pressure has shot way above the buying pressure. And you can see the price decline here. Let's look at intermediate to long treasuries, same picture. Very strong buying pressure, but now selling pressure is above the buying pressure and the price is declining. Long-term treasuries, 20-year treasuries, these had quite a nice rally here, and then they've just faltered, and you can see that in the buying and selling pressure here. The selling pressure is moving much higher than the buying pressure, and the price is declining. Not a good look. What about gold? Gold really tried to pop here. It's been kind of inching its way upward. It's had a nice, gentle upward slope here. Buying pressure above the selling pressure, and now we're getting kind of mixed messages here. Not sure what this means going forward, but as I've said in the past, it's really hard to make money on gold. It's not correlated to much of anything at any one time. And what about cryptos and Bitcoin? Well, you know my view on this. These are a risk asset, just like the technology companies in Ark Invest. And yes, there was a big fallout here because of the FTX mess back in early November, but you can see that these have continued to decline in value. Now, they did turn up recently, and the selling pressure has declined recently, and the buying pressure has started to increase. Maybe this means some good things for the next couple of days. Don't know. Have to wait and see. Look, as I said last week, until the Fed pivots by indicating that they're going to stop raising rates, or better yet, start lowering rates, the stock, bond, and crypto markets will be in for a very rough ride. I'm Calvin Rose, and thank you for watching Invest Smarter today. I hope you all have a nice holiday and a happy new year. That's all for now.